what are the investing or trading secrets? If you keep it simple, it will give you more stronger and a considerable returns over a longer period of time, right? I do not want any one of you to complicate things, right? So there are abundant of information in the social media or any search platforms, any indicator you search in YouTube, in Telegram, you get abundant of indicators. So it's not that everything you explore, right? We'll keep a very simple, concrete, and an effective system is what you need to focus, right? So today we'll be discussing about what are the investing secrets, right? What are the investing secrets? I have bifurcated into couple of big pointers. Let's discuss about them, right? First of all, if any one of you wanted to know, sir, what is a 100% confirmed breakout idea, right? So breakout means a stock or a sector where it is coming up very strongly in terms of price and in terms of volume. There is a lot of traction happening. From there, that particular script, that particular sector, chances are very high it will advance in a very big way for a longer period of time, right? That's called as a confirmed breakout idea. And one confirmed breakout idea for the next couple of years or even for the next couple of decades, 10 years, 20 years, is India. Yes, Indian stock market has that potential to give a multi-bagger returns in the next couple of years, right? Considering the kind of a GDP growth we are into and the economy, right? The entire economy targeting to become the third largest economy. And from a developing nation, we are entering into a developed nation, right? So there are a lot of pointers to confirm that we are in a very strong arena. So whoever are even starting out or whoever are starting to build out a portfolio, understand that we are in a good team to play in, right? To play in. And from the present size of the economy, right? When the Indian economy is reaching 7 trillion or $8 trillion economy, with respect to the growth in the economy, we will see a considerable growth in the stocks as well, right? The market capitalization of the stock market also increases with respect to the growth of the overall economy, right? Overall economy. When the market capitalization is increasing, what do you mean by market capitalization? Your present stock price into the number of outstanding shares. Outstanding shares means the shares available for trading, buying in and buying out, right? So when the market capitalization of the economy, when the market capitalization of the stock market is improving, which means the stocks also will move, right? Stocks also will move, right? Second important point is when India is in a strong segment to flourish in the coming years or in the coming decades, we have to take successful entry into stocks, right? I'll tell you one very important point is do not time the market, rather time entry and exit into stocks. Sir, what do you mean by this? Many people wanted to enter at the lowest price in the market and enter at the highest and exit at the highest price, right? You can't time the lowest and you can't time the highest. Rather, try to be in the journey, right? In the journey, right? So specific stocks you can select. Okay, this is the stock I need to enter at this price, and this is a stock where I can exit at the certain price. But do not wait for a scenario where I want the entire stock market to correct by 30-40%, then only I will be investing into market. No. Always there are opportunities in the market where it can give multi-bagger return. Even in the last 2 weeks, 3 weeks, when the market was correcting, mid cap and small cap corrected, there are many companies which have advanced also. For example, ACE, Action Construction Equipment, which we have been discussing from couple of months. Last 1.5 month itself, it has given more than 50% returns. So do not time the market, rather time entry and exit into the stocks, right? Do not be in a scenario, sir, market has moved high, so until and unless another 20% correction happens, I will not invest into a single stock. No, that's wrong, right? There are always opportunities where you can identify whether it is a bullish or a bearish market. Okay, so successful entry into the stocks, any position you're investing, initiate your investments with a not significant allocation to the stock, right? Whoever have missed the last weekly mastermind call which we had on Friday at 8 p.m., we have discussed on this called as position sizing, more detailed. We have explained in 3 scenarios we have explained, right? Someone who have missed it, go to your weekly mastermind session module in Teachable. And last Friday we have discussed about position sizing, right? So any investment you are doing as a first investment, enter with a smaller position, not a significant position, maybe a 1% or a 2% position, and from there you can further build. Lump sum investments not advisable, right? Not advisable. So you just start with a not significant amount, and when you enter, treat buying as a continuous process, right? So earlier were the days where you identify an opportunity, you invest into it, and you forget for life. No, now the market dynamics have been continuously changing, and if you have taken a position and if it is going in your direction, right, you should continuously keep increasing your position. If it is favorable and even the market is also favorable, just increase the position sizing, right? And your buying decision should be a continuous process rather than you buy and forget. I'll give you a small hack for everyone, right? That hack is, before you observe to enter into the stocks which are not available in your portfolio, first analyze the stocks which are in your portfolio. I repeat, before you think about any stocks where you can add the outside stocks, see in your portfolio which stock is already doing good and which is giving you a reason to add more. You can add into the stocks which are already in your portfolio, because buying is a continuous process. You can keep increasing your position. Third, when you believe the price and probability equation is favorable and your conviction is getting validated and reinforced, seize the opportunity to average up and enhance your investment. Right? Enhance your investment. Even when ACE, Action Construction Equipment, I have been discussing, sir, in the last 1.5 months, the stock has advanced by double digit in a high level. I'm already there. Should I further average up? Right? I know that this would be a question by majority of you, because we have been discussing from a couple of months. Whoever are already there, one homework for you is go to the latest con call of Action Construction Equipment, right? Go to the latest con call report. You find it in Screener, you find it in Google, you just search for it, or you find it in Trendline, TRENDLYNE, right? Trendline.com platform. If you just refer to the latest con call, they are very, very bullish in the upcoming months. And even that entire industry is growing at 20%, there is still further room. Right? There is still further room. So when your conviction is validated and reinforced, and the price and volume is also looking good, you should increase the position. And I feel ACE, we can further average up. For someone who are already there in the position, sir, I'm not there, can I still add? A not significant amount you can add, like a small percentage, 1%, with a strict stop loss, 8% or 10% stop loss, right? And if it is going in your position, you can further increase the position, right? Third, is market fall good or bad, right? Rather than deciding, or rather than worrying about a market fall, use that market fall as an opportunity to identify strong companies. Any correction, any bearish market should be used as an opportunity to identify strong companies, right? Market fall is an uncertainty, right? Things which are certain, things which are in your control, you can control them. But market fall is an uncertainty. No one can predict it. And the instinctive problem for humans is, any uncertainty, we can't take it, right? And we are instinctively afraid of uncertainty, right? And this is when you limit your ability to explore new opportunities. In a market fall, whoever are more worried, whoever are more tensed, right? So you should be developing that maturity within yourself so that you can identify, or you will be exploring what are the opportunities available in the market rather than worrying about the portfolio, right? Use that uncertainty as an opportunity for growth, and whoever can overcome the fear, embrace it, and identify opportunities, that is called as matured. Those are called as matured investors, and that's called as maturity, right? And diversifying is not only reducing risk, it's also a tool to increase exposure to various possibilities, right? So that's why when we discuss in our sessions, we focus on uh, defense, right? Infrastructure wise, railways, public sector unit, banks, right? Even on the auto theme. So you have to diversify. So even if one sector is little slow, the other sectors will be picking up. For example, if you see railways, right? In the last 1 month, it has been little bit slow, right? It has not been bearish, but it is in a sideways. But before month like January and December, it has given a very good growth, right? Last month, we have seen a very good growth in defense. Even right now, the kind of a defense expenditure that is being spent is huge. L&T, Larsen and Toubro, just booked thousands of crores order in defense, right? So once you diversify within the sectors, your risk levels is coming down, and you're exposing yourself to various possibilities of growth in various sectors, right? And once you overcome this uncertainty of market fall, even in March, we will see a volatile market because it's a financial year end close, and for the offsetting of taxation, the short-term capital gains, the short-term capital loss, there will be some positions which will be squared off, which will be closed by many investors, right? So there is some kind of a correction we will see, or some kind of a bearish market we may see in March. But rather than worrying about the uncertainty which is not in our control, if you can explore new opportunities, then your chances of success will improve to a very significant level, right? Position sizing, as I have always been telling you, right? As I've always been telling you, I've given you as a matrix here, right? As a matrix. So on one side, we'll be seeing the stock selection. Stock selection can either be right or either be wrong, right? Do not expect that all my stocks, whatever I invest or whatever I trade, should be right. No, there are chances of wrong stocks also we can select, because your entire thesis or your entire research would be correct. But what if the market behaves against you, or what if there is some geopolitical tensions happening which are not in your control, right? So we have both the probabilities, either right or wrong selection. And position sizing means in a particular stock, how much you have invested. Is it 1% of your overall portfolio? Is it 5? Is it 10%? Right? That's called as position sizing. And this discussion, I want every one of you to go to the weekly mastermind session module in your Teachable. And we have done an in-depth analysis of around half an hour discussion on all three possibilities of position sizing. I would highly recommend go and watch that session. Okay. So first thing, sir, I've entered in a stock, and let's say I have done the right stock selection, but the stock selection is right, and if your position sizing is right, which means I've entered into a company and I've added more into that position. I've been increasing my position. First I have taken a not significant allocation, 1%. Again, the stock moved up. I have averaged up, entered 2%, right? Again, the stock has shown more strength. Then you again add another 2%. So when you increase your position, then you get your multi-bagger returns, right? Multi-bagger returns you will be getting. Now, sir, I have identified the right stock, but I did not increase the position sizing. I've just added small percentage and from there I have forgot, I've been hunting for other stocks. So you have missed an opportunity which is already lying in your portfolio. Second, sir, I have selected a wrong stock. I've entered into a company 1% or 2% position, but the stock has moved down. The overall market was bearish, the stock has moved down, but my position sizing is right, which means I've just entered 1% as a first tranche, or a 2% as a first tranche. When the stock is falling, I've identified it, and my stop loss 8% is touched. So I've exited that position. I've not further added, right? I have not increased my position sizing. So even though the stock selection is wrong, position I did not increase, my position sizing is right. So what happens? It is okay, it is satisfactory, right? Because you have exited at the right time, or even the best part is you have not averaged more your position. Now, what happens on the other side? I've seen many investors doing this mistake. Sir, I've identified a wrong stock, right? I've identified a wrong stock, or in your terms, it would be a right stock you have entered, but the stock started falling. What I did, as I thought it is a good investment, I have further added more into it. Means your position sizing is also wrong. You have increased your position. Whenever the stock has fallen, I've added another 2%, sir. Again, it has started falling. I've added another 2%, right? The stock selection is wrong, and position sizing also you are doing wrong. This is where big losses will occur, right? When you average down your stock, when you are there in a scenario where you are trying to catch a falling knife, what will happen? You will end up in big losses. So that's why I always repeat, and I have no shame in repeating this n number of times. Never catch a falling knife. Why? Because when the stock is not right and you add more into it, that single loss, that big loss, will take away majority of your profits in the portfolio, right? Majority of your profits in the portfolio. That's why position sizing is very important. And in a strong position or in a strong company, you can increase your position up to 8%, up to 10% of your portfolio also you can increase, right? And lastly, I'll end this particular topic with two important quotes. It's not about whether you are right or wrong, but about how much you make when you are right and how much you lose when you are wrong, right? When you are right, you have to increase your position, you have to make big. And when you are wrong, exit at the earliest. And second, largest positions were not the ones I thought were absolutely the best, or that I was going to make the most money, right? No one will know that this particular stock will do wonderfully well, right? Or, sir, I'll build a position into a stock like 10% of my portfolio, which is a multi-bagger. No, it's a process, it's a journey, right? It's a journey. Sizing all had to do with how much money you could you lose. If you could not lose much money, you can take a very big position, right? You have identified a stock, and if it is not going in your direction, you don't add, or even you exit at the earliest. If it is going in your direction, you continuously increase your position, you make it big so that you win big, right? You win big. So these particular investing secrets, right, look simple, but if you are following it to the core, the chances of success will be very, very high, right? Will be very high. And as I always say, markets are not magic, or stock market is not complex. It's we who make things complex. Keep it simple, follow a simple mechanism, follow a simple process, follow a simple system. It'll give you very effective results. And people who are like beginners or just starting out, there is a lot of potential in the Indian stock market, and we have just started, right? We have just started. There is a lot of room to grow in the market, or the portfolios to grow. Just focus, concentrate, and just target for a 1% degree change in your entire journey. You need not target a 360 degrees change on day one. Just focus on a 1 degree change. It will lead to a multi-bagger portfolio. Okay. So let me know below what are the things you will be implementing from today, right? What are those rules or what are the things you will avoid doing from today? Let me know below.